My name is Max Gagliardi, and you're listening to the Talk Energy Podcast. If you're watching this video, take a moment, hit the subscribe button on YouTube, or you can follow me on your favorite podcast app. You could leave us a review. That would help the cause. You can also check out our energy company's weekly newsletter. That's Ancova Energy. We give market updates. We have pricing in there. That's ANCOVA on Substack. Check it out. We send out a once a week newsletter. I think you'll like it. This episode's guests are Russel, English, and Ty Zieman. Russel is the CEO and Ty is the CFO of Trailhead Exploration. I've known and worked with these guys for years, and they've put together an impressive company with Trailhead, building a leading position in Oklahoma's Marietta Basin. This episode, we discuss the challenges of building an oil and gas company from the ground up. We talk about the Marietta Basin and the deep wells that they're drilling. We get into the technical side of their operations, including reservoir dynamics, drilling considerations, infrastructure build-out, and service costs. Lastly, we talk about the current state of the small oil and gas producer world, capital in the space, and opportunities on the horizon. Hope you enjoy the show. Guys, welcome to Talk Energy. Thanks for coming on.
Hey.
Hey, Max. Thanks for having us.
Yeah, I'm happy to have you guys on. We've known each other for a while, have worked together, have got to see the success that you guys have had. And just it's interesting because like you guys are around, I think around my age, and seeing entrepreneurs in the oil and gas industry and what you guys have been able to do. And so I just thought it would be fun, a lot to talk about. And I'm glad you guys carved out the time.
Absolutely.
So kicking off, I mean, I know your background and stories, but maybe just tell everybody who you guys are, and then we'll and maybe just some of your background, kind of go from there.
Yeah, I guess I'll start here. Russel, English, CEO here at Trailhead Exploration. My background, OU grad, PLM or energy management, and had an internship with XTO Energy down here in Fort Worth, and really enjoyed that. Got on full time in the land department there, and worked there for about 10 years until the Exxon merger. Actually, after the merger, once they were getting ready to make the move down to the big Exxon campus in Spring Woodlands area, decided with a couple of us here at XTO that we wanted to do something different and do something smaller and be more entrepreneurial. And so we ventured off and got our heads together and started Trailhead.
Yeah, Ty, go ahead.
Yeah, so I'm conflicted at Trailhead. I'm a Longhorn, and we've got a handful of Sooners. We finally got the better of them for my first time with Trailhead this past fall. But yeah, started so business degree from UT. Wanted to do investment banking, but wanted to stay in Texas, and so that kind of led me to the energy industry in Houston. I was with Wells Fargo and their investment banking group for about 3 years before I got connected with a guy named Steve Pruitt, who was starting Elevation Resources out in Midland. It's a Pinebrook-backed company, who you guys are familiar with, Max. And what was intended to be a 2 to 3 year deal before you start the next one is now Steve's still getting after it out there, coming up on almost a decade with Elevation, same iteration, same assets. I left in 2019 when I got connected with Russell and Bryant and Josh. They just gotten started and we're talking with Old Ironsides, and so timing kind of made sense, and so jumped back to the Metroplex. I'm from this area, so joined those guys about a little over 3 years ago.
I was going to ask you. So you said you're from that area, Russell. Are you from that area as well, or where did you grow up?
I am. Yeah, I grew up in Dallas, but Highland Park High School, and mom went to UT, and I decided to be the trader and go north to OU.
Yeah. Fort Worth is cool. Like, I haven't spent a ton of time there, but it's like an underrated city in Texas. I think it's like, Dallas is, I don't know. It's probably not for me. I mean, there's a lot in Dallas, a lot out there, and Houston's just huge and crazy. Austin's just nuts with how crowded it is. And I just feel like Fort Worth, like the last time we went and we hung out with you guys, I hadn't really spent much time kind of downtown, and it's just such a cool city. You guys still enjoying it and having the office there?
Yeah, definitely. I think Fort Worth has a good vibe. It's a little bit laid back, but so it has the kind of like Western culture. But downtown they've done a good job with, and now that people are back to the office, it's a little more vibrant than it was the last few years.
Definitely. It just feels that laid back feel to it. So I enjoy visiting. We need to get down there another time soon. But one thing I want to ask you guys is kind of just like the skill set you feel like, the things that you learned at your prior jobs, and maybe Ty, because you were sort of in a private equity backed entity, maybe it was a little different because you got to see it. But Russell, really from you, kind of like the skills you learned at XTO, they, laid the foundation for being able to go out and start something on your own, and just talk to how that, how you matured to that point, the skills you learned, and how that helped propel you into what you're doing today.
Yeah, I think a place like XTO was unique and maybe not unique in the sense that a lot of large companies are a good place to learn and build your foundation. Get exposed to a lot of different things and different assets, and that was kind of my experience in the land department, and moved through work in Fayetteville initially to work in Mid-Con, and then more generally kind of portfolio enhancement A&D work through the Exxon merger, and trimming the portfolio mostly is what they were doing there. And yeah, I think, you don't get to scratch that entrepreneurial itch as much at a big shop like that. But just the exposure and the rate they were growing at was crazy. With the shale boom, and you're well familiar with Chesapeake and those, they were here in Fort Worth too, and it was crazy times for a while after the Barnett kicked off, and all the various plays kind of went through their development, and so that there were a lot of things that I didn't know that you just learn on the fly.
Right.
When you jump out, and all the back office stuff, and the insurance and the benefits and the HR stuff, and some fun stuff, some not as fun, but it's been a wild ride, but thoroughly enjoyed it. Let Ty share his experience.
Yeah, that's I think joining Wells Fargo, it was a very interesting time in the industry. So I graduated in 2010. And the year of, we were on the heels of the financial crisis, and so business student internships were really tough to come by in the summer of 2009. And so just finding a job, it was great. And the investment banking analysts, there was a gap year where they didn't hire anybody in 2009, and the some of the stories, not all the stories about investment banking are accurate, but the hours are real, and and they were itching to have a low man on the totem pole. And so we were there finally. And then, I was excited to do it for sure, but it kind of coincided with, an oil and gas boom, especially on the capital raising side. And Wells Fargo was doing a ton of equity deals, debt deals for MLPs primarily, did a handful of upstream ones as well. But it was a really cool time to be there. And so you learned how to work quickly, you honed analytical skills, you learned a lot about a bunch of different companies. And so, that skill set's kind of irreplaceable for me. But ultimately what I wanted to do was something where I'm more in the weeds kind of guy. And so with, as investment banking analysts, you're touching a lot of different deals and a lot of different companies. And so you don't get to, hone in on the business. And so that's what my move out to Midland and with Elevation Resources was like, okay, let's do this to help your business, or the business you're working for. And so the skills that I learned there have at Wells have transferred, to the energy space, and it's I learned the business in Midland, and that's what was awesome. And admittedly, we had a great back office, so I didn't do any of the accounting work, and it's not really my background. And so I took for granted some of that stuff that Steve and the team had in place already at Elevation. Because coming to Trailhead, we outsource our accounting, but it's ultimately running through me. And there's a lot of stuff, as Russell mentioned, that you don't. That's not very sexy when you're thinking about starting a business and making everything work. You just don't. It's a lot more fun to decide when and where to drill a well or which acquisition to do than to determine what insurance provider you're going to use. Or
yeah, for sure. I think that's there's a lot about being an entrepreneur or starting a business that's not very sexy, and it gets kind of demystified once you do it. You get in and you do it, and you're like, this is actually just really kind of gritty. Day to day, you're just trying to get the stuff done you need to do. There's no real blueprint or roadmap. It's kind of I hope that the things I'm doing today and this week and this year are the right things I need to do, but no one's really telling you. And then it's only in retrospect can you see okay, that was a good call. This maybe I would have done differently. But I'm interested to hear just kind of the story of, Trailhead and how it got together. I know, Russell, you knew some of the guys from XTO. I don't know when you guys met Ty. Was it we sat down over beers and we're just we got to go do something, make a move? Was there one moment? Had it been a building thing? And then whenever the decision was made, how'd you meet Old Ironsides? And just walk me through kind of the genesis of what you guys are doing today.
Sure. Yeah. So I guess, during that time period when, people were starting to leave XTO prior to that move, had, thought about, maybe it's time to do something. It's been nearly a decade here and learned a lot, ready to scratch that entrepreneurial itch, and was already friends, acquaintances with Josh Duvall, our COO. He was a reservoir engineer by background, and I worked a number of assets within XTO and even some in the field too, and then worked his way up into a planning role, which was more of a corporate kind of business role. And we got to talking, pitching around some ideas, and just got excited about it. And then Bryant Capriva, our geologist, one of our geologists, was also at XTO at the time, and I knew him through he had worked at Basin a little bit, and he was a couple years younger than us, but a bright guy, and I think we were just at a happy hour or something, and we're talking about that would be pretty cool to put something together, and so we just started meeting on the weekends, and nothing. We had to be pretty careful initially, just kind of because it was just a weird atmosphere at XTO. But and so we decided, let's do this, and so we jumped off. And I guess I'll backtrack a little bit, but right before we did, one of my brother's good friends, Patrick Halpin, who's with Silver Hill Energy Partners, they had a couple years before had a wildly successful exit of their kind of Loving County position to RSP. Sorry, I'm drawing a blank there. And they were kind of thinking, what do we do next? What do we want to do it again? They'd taken some time off, and decided they kind of wanted to seed some younger teams a little bit, and at least that's what they were thinking at the time. And so they graciously gave us some G&A just to get it together, get some software, start pitching ideas, and they really helped us out a lot, tremendously on not only with office space. We officed in their offices in Dallas for about a year, commuted over there every day. And then not only that, but just honing our pitch book and how to look at things and how to raise capital. And so we started small with them. We eventually convinced them and some other private investors that through their relationships to come on board. And we bought a little bit of non-op down in this Love County prospect. Started liking the results and realized there was really a bigger opportunity there and more leasehold available than we thought. And so then we went on a larger capital raise. And I guess about that time is when we first got introduced to Ty. I think it was through Bryant and one of his friends. Were y'all on a trip? Seemingly.
Yeah, in Midland, there's a good young professional community, and Elevation was going through a sales process with RBC, and so kind of looking around to see what was next. And so Sam Beckham is a college buddy of Brian's, another geologist in the industry, and he introduced me to Brian. This was actually when you guys were still at XTO. It was pretty early in 2018. We were talking about it, and then I think then we stayed in touch. The timing didn't make sense. It's always hard to it helps when you're all at XTO, right? And you can kind of, but to put the team together, it's always hard to for stuff for everybody's timing to sync up in order to make sense to leave what you're doing. There's always a cost to that, right? Like, what are you leaving? What are you giving up? And what's the benefit of joining? And the timing it took about a year for the timing to kind of sync up.
Yeah. Ty joined us over at Silver Hill's offices for a little while before, and with our capital raise, we got introduced to, I guess since you asked, we got introduced to Ironsides through Silver Hill. They were Kane Anderson backed, but they had gotten to a point at one point in their iteration before they scaled it larger. They thought they were going to need some more capital outside of Kane, and so they pitched to a number of different groups, and one of them they came close to inking a deal with was Ironsides before Kane decided to go in bigger, and they just really liked them and said, we're going to put these guys on your list. We really liked them. I think you need to talk to them. And so that's how that happened, which is kind of, they're a unique group being in Boston. You don't think of energy, oil and gas, especially, but obviously a capital hub. So, and they have some Fort Worth relationships too, actually. So.
Yep. That's great. I got a chance to talk to one of the guys. I think Ty, you had gave me an intro a while back. This was probably a couple of years ago, maybe before COVID or around COVID, but seemed really sharp. And I've heard good things from other people. And I want to talk more later on in the episode about kind of the private equity space right now and everything going on. But before that, let's just talk about this asset, what you guys have going on. Without disclosing things that you can't. I mean, a lot of what you're doing, it's out there. You're drilling wells so people can see kind of where you're at. But just the asset and give the overview that you can, and then anything else that you want to share about what you guys have going on at Trailhead, and we'll get in some of the details there.
Yeah, I've talked a little bit more here, so Ty, if you want to kick it off, and I'll jump in.
Sure. Yeah. So we're focused in Love County, Oklahoma, which is we're about as far south in Oklahoma as you can get. We're right along the Red River there. So I-35 cuts Love County in half. Most people know where Windstar Casino is. So that's usually the landmark. We're about 10 miles northeast of there in what's called the Marietta Basin. It's a very unique basin. Most people haven't heard of it, and that's probably because of the size, and also the players that are in the basin are not big promoters of it, and we haven't been either until we kind of got our land position together and set up a rig. And so the basin kind of works northwest to southeast, getting deeper as you work your way to the southeast. Some of the players that have positions in the basin are well known. in the industry, including Continental, Camino has a position through 89 Energy that they have. Kaiser Francis has a unit and a handful of non-operated interests in the basin. And then the primary operator that's been active over the last decade is XTO Energy, and then us, of course. And XTO has been very active in the basin. We like to tell folks when COVID hit our industry, hit the world and impacted our industry, XTO went from 50 some odd rigs in the lower 48 down to about 9. And they were running 8 rigs in the Permian Basin and 1 rig in the Marietta Basin. And so we tell that story because it shows the quality of rock in our basin. And we were grateful for it because they continue to improve and delineate the basin. Our primary target is the Woodford Shale. That's where most of the development has been. A secondary, our geologists would call it a second primary target, is the Caney Shale, which is part of the Mississippian Horizon, sits on top of the Woodford, and there's a handful of Caney wells, a lot of data taken in the Caney, and something that we're looking hard at as a next development target. But in the basin, there's probably 70 plus Woodford horizontals. So it's not like it's exploration. Yeah. And so there's been quite a bit. The biggest, what people probably think of when they think of the Marietta Basin, if they have heard it, is the depth. So where Trailhead's operating is 16 to 17,500 feet vertical depth. And then we're kicking off horizontal from there. And so what's unique about the basin is that we have a large liquids component at those depths. Most people would assume it's a gas play, but our EURs are anywhere from 40 to 60% oil. And so that's what, and the depth is a meaningful component of our story, of our thesis, which is pressure. The pressure that comes with the depth has made the play, and the fact that there's oil at those depths has made the play unique and we believe profitable for us. So so that's what we were focused on. And I would add, we've got a handful of ancillary businesses. We're all in on the Marietta Basin. We've been putting together a mineral position, both under San XTO that we've got. And we've got a pipeline that's helping get our gas to market. We've got an SWD well now just south of the basin that is handling our water. We've got a surface, we call it a ranch. It's 160 acres. We built a pad there, and we use that for field office and storage. And so we're all in on the Marietta Basin at this point. We really believe in it. And like the results we're seeing.
Real quick on that, just the history of that, because I know that Oklahoma is really interesting to me being in the industry. I'm from Oklahoma, and I remember the thing that hit me when I first got into oil and gas was just the history around the state and all these different areas. Is there any thing you guys can just talk about the Marietta Basin and some of the history there? And I don't know the answer to this, and maybe you guys don't follow the back history, but who was kind of when did that discovery happen? And just any type of history that you can give on that area, I think would be interesting to me personally.
Yeah, I think it's a little unique in that it doesn't have a lot of historic production, at least in the basin, primarily due to the depth. Back in early 2010s kind of vintage is when XTO had a big program going in the Ardmore Basin, just 15 miles up the road, mostly Carter, Johnston, Marshall counties, and that was a shale gas play primarily. There were some liquids there, but and then they started leasing, and Continental had a position as well down here in Love, kind of western Love County area, and then tried to pick off some stuff a little more central, kind of I-35 corridor. And they drilled a test well, I believe it was 2011-ish, was the first one, the McKay well. which had some difficulties, but turned it on, and I think we're surprised by the liquid component. I think that was not the expectation, and then through that, kind of said, well, maybe there's something here, and in the meantime, commodities cycles, do their thing, and people start looking for oil plays and unconventional sense, and this stacked up pretty well, I think. So they started primarily XTO and Continental through a couple rigs down here, and started developing 1 mile wells. This is early in the shale days, and so they kind of started to drill a little further east, and kind of just going unit by unit, kind of not a lot of competition, and just leasing up. It was lesser known, and people were a lot busier up in northern parts of Oklahoma at the time. So it kind of flew under the radar, honestly, which was advantageous for our group as well.
Yeah, definitely. That's kind of what I thought. I just didn't know if there had been any prior to that. Some of these areas, they were like, they had a history and then it went away, or didn't, and then with the new technology, it came back. But it makes sense because of the depth. And these are some big boy wells. Why don't you guys talk about, you mentioned the total depth, but for the layman here who doesn't think in, can, turn that into miles, like how deep, you said the number of feet, but it's like 5,000 something feet in a mile, but like these are significant in terms of vertical depth and horizontal. So these are some really, kind of like modern engineering marvels, to be honest, guys. I'm not trying to sound too over the top, but what we can do today with technology in this basin is especially, benefiting from that. But just talk about these wells and the challenges and opportunities with drilling them.
Yeah, I would say that was our biggest risk coming into the basin was drilling timelines and difficulty, and then the cost associated with that. And we felt we could, we watched XTO. We're in all the wells all the modern wells, or all the wells in the last like 3 or 4 years. And so we watched them, and they're a solid operator. We felt like we could improve upon that, and we started to do that. But that was the biggest risk. To answer your question, Max, you're talking 3 miles, over 3 miles deep, and we're kicking out another 1.5 miles. XTOs push the limits in some areas a little bit shallower. It's almost 30,000 feet measured depth. And so when you start to do that, our engineering team will tell you the type of rig you need is very specific. The type of tools you need is very specific. And so it's you start to push the limits of certain equipment that can only get so far. And so that said, what happened, and so I would say it's a little bit different of a shale play in that sense, because it's, while maybe collectively the lower 48 can improve at the same time, and you can move it. Our basin is improving at a different rate. There's only a couple of players active in it because of the acreage is locked up, but then also it's different. The depth is different. And so just over the last like 6 months, we're starting to see like rapid improvements in the drilling timelines. And so what, was, our initial AFE was about 90 days of drilling, which is like mind-blowing to me, but to most people in the industry, they're like, oh my gosh.
Yeah. That was kind of the basin average.
Yeah. And we were right around that on our first well. And so we were really pleased with that. Fast forward to today, I would say we've seen wells in the basin that have been 150, 180 days. So just to, full disclosure, but over the last few wells in the basin, we're seeing days trend down into the 50s and even into the 40s days drilling. And so it's just like any other basin that you see this improvement. It's just happening at a different rate here, different time, because of the uniqueness of it and the number of operators participating in it. And so I say we're really excited, because that's like just a game changer for us, is getting those drilling days down and repeatable. And it's just, it's just what our industry does. And so we knew it happened, but it's always exciting to see it firsthand and not be running some model that we're pushing out there.
That's huge. Yeah, my dad's a geologist, and when he was telling me about when they were first steering horizontal wells years back, and he's like, man, it's like trying to write your name on a chalkboard with a 20-foot pole. And he's like, it's not like the easiest thing in the world. What other challenges on the drill side other than depth? Like, is the rock types? I mean, as you go through different formations, is it the type of bit that you use? I mean, I'm sure that like you're glossing over the technical complexity of making this happen, but just anything else on the technical side that you guys have to think about and calculate and do as you try to get these things done?
Yeah, the Woodford Shale it creates its own challenges and where we're at, and one challenge that we've been navigating is understanding where you are in the Woodford Shale. There's a lot of signatures that are similar, and the risks are if you get up too high in the Woodford, your bit life is much shorter. We realized that on our first well, and we're talking, keep in mind we're 3 miles deep, and then we're depending on where you're in the lateral, you're anywhere from 3 to 5 miles out, and so it really sucks if you only get 100 feet out of a bit and then you trip out for 2 days. And so being in the right spot is a key. If you get too low, you risk getting stuck. And this is not unique to any play, but our depth creates those challenges. And so we learned that our drilling team has some stories about bits and what they look like coming out of the hole. Stuff that's trophies, if you will, or reminders of what can go wrong. And so to be able to kind of navigate that and progress forward, now we kind of know where we need to be. And then we've got the tools, or we're putting the tools in place to make sure we're in that spot, that window, so that we can get 1,000+ foot bit runs has really been kind of the key factor.
Nice. Yeah, that's what's driving a lot of the improvements now is the downhole tool selection. The wellbore designs are pretty well established now, but yeah, there's certainly a lot that goes into and that we've learned in the last our first few wells here, that each time you do it, you get a little bit better, and then you see a step change in lateral targeting, or the ability to stay within this very narrow window that gets you a better ROP. Then you start to get real excited about where the play can go.
That's cool. What other science, or is like, have you guys done any, whatever you can disclose? I don't want you to say anything you can't, but like other stuff you guys have tried to use, like has there been seismic or anything else? Obviously it probably helps XTO drilling more wells, other people drilling more wells in the basin. If you participate in those, you get data, but just wondering, like from the science or even technology side, what other things you guys have had to utilize to try to wrap your heads around this thing and be the most efficient you can as an operator.
Yeah. We've done a lot of our own science, in addition to, like you mentioned, data collection from our non-op wells. But we've been pretty creative in doing science on our own wells. The standard things that everyone does, the logging and all those kind of measurements while drilling, but some of the unique things, I think, is analyzing cuttings. There are a number of processes, some well established, some kind of new forefront technologies of everything from hydrocarbon analysis to what composition is down there, what's the rock strength, things that will help you predict economics and tool selection. So that's some of the stuff that our geo team really has championed, getting a lot of those things in front of us and say, yeah, this could make sense, and it's could save us money.
Yeah, absolutely. Talk about the composition of this gas in terms of how rich it is. It's pretty wild. Just the amount of gas that comes out of these wells, and then just the liquids component it's huge. And you guys really hit some pretty good timing on getting gas online with commodity prices. And, you know, when you have decent gas price, but then you also get that uplift from the liquids, it's pretty sweet. But maybe just talk about some of the liquids rich aspects of this and maybe what causes it at these depths, if you guys know from the science standpoint.
Yeah. Ty, you want to take this one?
Yeah. So one of our board meetings, when we were deciding to go drill our second well, one of our investors made the comment. He said, "You guys did a really good job of getting commodity prices up." And, that worked out. It's always great to be drilling. We spun our first well in May of 21, and so we've seen service costs increase dramatically since then. Steel prices, rig rates, diesel prices are all meaningfully higher. In the basin, in particular, commodity you have to have supportive commodity prices, I think, anywhere. But they've been very helpful to us. Our IPs are in the range of, call it, depending on lateral length, and we tend to talk in 30 to 90 day IPs. We don't subscribe to the rip it open approach. We're more in the slow back approach and maintain pressure over a longer period of time. And so we've seen IPs on the oil side in the 800 to 1,200 barrels a day, and then on the gas side, depending on where you're at, is in the call it 5 to 8 million a day. XTO has ripped open a well, and we're grateful. It's another one of the benefits of being able to watch different approaches, and it reached 24-hour rates of north of 3,000 barrels of oil a day and 13 million a day of gas. And so it's phenomenal production. Our EURs are north of 100 barrels per foot on the oil side, and call it 1 million cubic feet per foot on the gas side. And so they're big wells, and in the gas, to your question, Max, is liquids rich. We're talking 1,300 to 1,400 BTU gas.
Good stuff.
Yeah.
So it's great. And we're very balanced from a commodity standpoint. And, so it's displayed, works in, $3 gas, just like it does in $8 gas. Then we're not complaining when commodity prices go up. But we drilled our first well, and like I said, in May of 2021. We kind of underwrote it in early 2021. And so at that time, we were looking at $40 to $50 oil, and we were in that $3 gas window, $2.50 to $3. So I remember one of our investors saying, "Why don't you guys sensitize gas?" And it was like, well, we feel like gas is range bound. And, we were definitely wrong on that front.
Yeah, everybody was.
Yeah, and so it's all of it is great, but we're beneficiaries of, if gas is up or oil's up, we're somewhat commodity agnostic. We're pretty balanced in that.
Yeah, it's nice to be balanced and insulated there.
I will say what this is interesting. I'd love to get your thoughts on it, Max. Is to have oil prices up and gas prices up at the similar times. What that does to the service industry, from a rig standpoint, for a while, I'd say maybe earlier in this decade, oil prices were meaningfully up and gas prices were not. And so you didn't have this rush to both basins, gas and oil basins, maybe that you do right now. And I'm not sure exactly how that's impacting our industry, but we feel like it, we're seeing it from a rig standpoint, from an iron standpoint, of that we're competing with multiple basins, not just the Permian. We're competing with the Haynesville, the Marcellus, for equipment and crews, which is driving prices up, costs up quite a bit.
For sure. We've got a bunch of different topics we can kind of dive into on this, and some of this is just sort of like the current state of things, which I wanted to talk to you guys more at the end, kind of more macro, and then also talk about the current state of capital and stuff like that too, and service costs kind of flow into this. But before we get off the wells, had a question around the depth. Does it make the reservoir, is it more charged? Is there more pressure? Does it impact like the curves, right? Like, do you end up getting a more steady decline, or is it the same type of decline that you'd see in a really shallow well? Or just talk about like the reservoir with it being that depth, and how does that impact like decline curves and things like that?
Yeah, I'd say one of the biggest, the pressure in the drive creates larger EURs. And from an operating cost standpoint, it allows, we flow up casing initially, and so and then ultimately all of these wells will end up on gas lift. But that time frame that they flow and your operating costs are so low. And so they'll flow for anywhere from 3 to 9 months. I mean, and they probably flow for longer than that, depending on where you are in the basin. But that's probably one of the biggest things, a beneficiary of the depth, is just the duration of natural flow before you put it on lift. And ultimately, though, you need that pressure to the shallower part of the basin does not have the same economics. And I say shallower, I usually put it in air quotes because it's still 10,000 feet relative to where it doesn't have the same economics, because you don't have the same initial drive and the same EURs that you do where we're at. And so we call it core, which is probably an overused term, but there's a depth band that we think is the core of the basin, and that's Trailhead and XTO are the operators in that area.
For sure. Where are the pressures? Is it all across the board? And not pressures in the reservoir, but pressures in the service side, like you were mentioning around costs coming up. Is it across the board? Is it some areas on the service side worse than others? I mean, just kind of talk more about the service side of it, getting the equipment you need, getting the crews you need, and the challenges with that.
Yeah. I think we've seen, and this is affecting every industry. I'm just going to echo the sentiment, I think, but obviously the people is a big issue right now. We had a lot of people leave the industry in the last downturn and reluctant to come back, and then compound that with COVID and supplies and steel shortages, and getting drill pipe is tremendously difficult right now. And consequently, when you are able to find some, you need to pay for it right then and there, take delivery, or have, it helps if you have a multi-well program, guarantees of a larger contract. That's kind of the world that we're living in right now.
Yeah, for sure.
Some data points. Our initial rig that we utilize was a neighbor's rig that we moved from, I believe it was Wyoming, and we paid a large rig mob, but our day rate was in that kind of 15 to 17,000 per day. And today we're seeing the market anywhere from 35 to 45, depending on type of rig, and so it's doubled, and in some cases more than doubled from. Wow. We're talking a year and a half ago, and so that's. I think there's some, the service companies are being more thoughtful this time around about, okay, do we want to flood the market with rigs and capacity, or do we want to manage margins? And so I think that's putting pressure on it, and I don't blame them. I think it's well known. The challenges of the cyclical nature of our industry, and so everybody's trying to balance that out. And we're seeing it. I mean, diesel's a big piece of our AFE, diesel costs, and we were like, okay, do we run $2 or $2.50 a gallon through here? And now we're at $4 a gallon on diesel costs, and Russell mentioned the overall service environment. Every time the question is, I remember in 2014 timeframe, it was like, gosh, we have a lot of green hats out there, and then we go through the down cycle, everybody leaves, and then you know, like, how are we going to lose efficiencies when we come back up because we don't have the same people, the same crew? You know, what's going to happen? And so I think we're in that right now. Steel prices is another one. We've seen steel prices come down. We were looking at that the other day. Raw steel prices have come more back in line, but casing prices are still elevated from where we are, many times, you know, 100% elevated from what our a year and a half ago when we picked up a rig.
It's wild. I mean, the industry, it's not easy, right? Like, commodity prices come up and then service costs go up, and it's always a challenge. One of the other challenges I think in this basin is the lack of infrastructure. And this is some of the stuff that we've helped you guys with, but talk a little bit about, just like you mentioned, you have SWD now, you've got a pipeline, but just some of the challenges around bringing on fairly sizable volumes in an area where there may not be as mature infrastructure available.
Yeah, the infrastructure actually isn't as big of a challenge as it may seem, but we're fortunate in that XTO planted their flag here and has a gathering system throughout the basin and brought energy transfer into the basin from a gas side. Targa has a legacy position, and there's a few others that are in the vicinity. And so from a gas standpoint, there is capacity, and we're utilizing or will be utilizing some of the processing capacity that's available from the Barnett Shale. So we're taking Energy Transfer is taking their gas down south, and there's a lot of unutilized capacity there that we're able to tackle. And I'd say from a crude side, we're uniquely positioned between, call it, Cushing and the Gulf Coast, and so there's local refineries in Ardmore, and as you work your way up north to Cushing, and so we've got great partners on that front that are picking that up, and thanks to you guys helping us to find those partners. The water side is interesting. We've looked at a handful of ways to tackle the water piece. These wells aren't, you know, from a water oil ratios ultimately is kind of a 1-to-1 in the Woodford is what we've seen. So they're not, you know, overly water prone per se. But when you have those volumes, it's still a lot of water. And so we're right now we're trucking our water to our SWD, but before we were trucking it 50 miles to a commercial SWD, and those costs add up, especially when diesel prices are higher and there's a, you know, trucker shortage, and so that's one of the reasons why we acquired this SWD, was to help solve that. And ultimately we'd like to get our water piped there and think it can be a solution for the basin as a whole. But it's been huge in cutting our water costs, call it $1.50 a barrel for us. And so the other thing, this is somewhat interesting, and this is a little bit of a plug for these guys. There's a group called AquaCat that was formerly Committed Water, and we've had them out on location. They've got a filtration system that filters the produced water down to a level where you can spray it on the surface. They have OCC permits and approvals to do that, and we did that on our first wells location, and we love to do that. You need a certain level of volumes to make it work, and so we were, you know, it was only on our location for a short period of time, but it's a really cool technology that I think would be. It's obviously great whenever you don't have to pump it back into the ground. You're doing something for the surface owner, and it's, you know, cost beneficial for you as an operator too.
Yeah. And I'd echo, you know, thanks to Ancova's help with helping us build kind of the midstream aspect arm of Trailhead. That was a goal of ours. We wanted to, you know, kind of fully integrate and have that ability and continue to grow it. So been really good partners on that front.
Well, cool. I'm going to clip that out and we'll use that as an ad for the company. Thank you. Jason's great. And he's got a wealth of knowledge, and his ability to get out there and get those projects done, I think is really good, and happy to have him being able to offer that expertise, because he's an engineering brain that we've got here. But now the area is it's got, decent infrastructure, but it's always interesting to think about, what is capacity? It's such a loaded question. It's like there's capacity, but like we got this specific location, and then you need processing, you need compression, maybe you need water. And it's one of my favorite puzzles to try to piece together. Kind of built my career around thinking about those problems. But a lot of guys, I think, in some areas get spoiled because maybe it's just an abundance of wealth. And then, maybe they move to another area and they're like, oh no, like I thought we were going to run a rig and we can't because there's something impeding that. And so it's good that you guys have that plan in place and you're getting the product moved and getting good pricing and all those things, because it can impact you over time. But we got probably 10 minutes left here. I wanted to talk about just like the capital side and private equity world. It's changed so much since you guys probably got your commitment. Just really this one for you, Ty, or Russell, you can jump in, but just your thoughts on kind of the future of E&P, private equity. You're hearing rumors of guys raising new funds now, but just high level, how has that world changed, and your thoughts on the private equity stuff going in the future?
Yeah, I'd say we were fortunate on our timing of raising capital initially, and kudos to Russell and team for getting it across the finish line. And we've got great partners in Old Ironsides. Can't say enough good things about them. I always tell people we were a company that had raw acreage, undeveloped acreage through 2020, and that's a pretty scary situation to be in when you're all your equity calls are to pay G&A. Fortunately, we're free cash flow positive now, and I think our equity calls are behind us, and so it takes a lot of patience to sort of we know a lot of our companies we're friends with that got rolled up in those timeframes, consolidated, and we're grateful to be partnered with Old Ironsides that they didn't see things that way, and we're able to see it through, and I think hopefully we'll pay dividends for the both of us. But yeah, in that time frame, we're very traditional private equity. I would say we put together a leasehold position, we're proving it up, and then the intent is to sell it. Or if the market's not there, then we'll go into the development mode. And maybe that's a different form of capital, or it's a recap or something like that. But that really hasn't been happening of late. There's not a lot of new acreage positions that people are putting together with kind of the lease, drill a few wells and flip mentality. And so, and we're not really building ours that way either. I'd say, I think anytime you build it to flip it, you're gonna, you do things differently. And so we're building it to run it. But ultimately, we look a lot more like the private equity of, call it the 2013 through 2017 than the investments that people are making today. But to answer your question on the landscape, the capital is precious, and people always say that, but it really feels that way now. We've, anecdotally, there's a lot of really quality private equity firms that have really good marks that have struggled to be able to raise capital, raise their next fund, and that's a product of our landscape, I think. And so I think people are having to go different routes to put capital together. And there's a lot of great opportunities out there. We've looked at a handful of deals that traded. We felt like a really good, attractive numbers that are that probably weren't there, 4 years ago, 5 years ago. So it is definitely unique. Different investor group, but those who can raise the capital are going to have really good opportunities.
Yeah, there are definitely opportunities out there for those that can raise the capital, but it's increasingly difficult to do so. But I think just overall, larger picture. There's products.
Sorry, I just froze for a second. Keep going. You're good.
It's like I'm cutting out. Are we back?
I can hear you. There we go.
Okay, sorry. Yeah, there's still a need for us. There's still going to be economic projects, and technology continues to improve. And I think there are where there's available capital, it can be put to very good use.
Absolutely. Well, I pay close attention to it because it impacts what we do. And, I look at, like, I think it's Inverus or somebody puts out a deal that shows like the teams that have gotten funded, and it's wild. Like, it was I haven't seen this chart in a while. I think they did it in 2021 or 2020. And it was something like in 2012, 13, 14, 15, it just was like the number of new teams getting commitments were like, I think it peaked out at like 400 something teams in 2014 or something, or one of the years it peaked, and it was like 400 teams. And we were joking around at the time because that was like right around when we started. And so commodity prices got really bad in 14. And so we're like, oh no, this is the worst time to try to start something. But then there was like these new teams getting funded, and that was kind of our clients. And Mark was like, you can't swing a dead cat without hitting a new team that just got $300 million or whatever, and it was like every time you pulled up the press releases, there was somebody getting funded. And then in 2020, I think it was like one team. It was like zero, basically. Like, they put out the chart and it had gone down to like basically nothing. And then the M&A market in 2020 was like 1994 level amount of transactions done or something, upstream and midstream. And so I'm curious to watch to see if private equity capital will come back, if guys can get funds raised, because I think it creates more opportunities for us as a service company. But it does still seem like people are being active. It seems like there's still stuff out there to do. At a certain strip price, there's a lot of opportunities. But what do you guys just think about the industry in general, and really maybe focus it more on kind of small and mid-sized companies? But like, are we back? Like, it's like Texas every year, like we're back, but are they really back? Are we back, or are we really back? Like, it still feels kind of tepid, even though prices are good.
It's a low blow on the Texas.
I think it seems like people are underwriting to a more conservative strip, and maybe some of that is lessons learned in the past, maybe, but it does make M&A a little more difficult sometimes. I think that's probably why you're not seeing as much get done. But I think, prices beget activity, and, we are not in an oversupplied situation, and there's still some discipline on the part of even the larger shops. So, hopefully it's a little more sustainable here in the near term.
Yeah, we were looking at some PDP deals. And one of the, especially when the strip is heavily backwardated, you're underwriting to a strip, let's say, but it looks like a 2 years cash flow multiple to them, because it's like, we're at the time we were at $100+ oil. And so it's like, well, if you believe that $100 oil is going to stay there, then you should not sell your asset at this price. But we can't underwrite to that. And so it created some challenges in getting deals done. Is, what is the right commodity price deck? And so I think a lot of folks were like, well, let's hang on to this. That said, we were so low for so long that I think people started getting comfortable with saying, okay, I'm getting the number I want, even if I'm not getting the discount rate that I was hoping for. And so, if you had an asset that you've held and you wanted to sell for the last 3 years, commodity prices coming up allowed you to get a number that you were okay with, even if the discount rate was not what you were hoping for.
Right. What's exciting outside of the Marietta to you guys? I know that you're probably not out doing something right now, but if you look around the landscape of the lower 48, obviously the Permian is still cooking. Gas is kind of looking like it may be structurally higher. We'll see. Gas tends to rug pull everybody all the time. But of the different things out there that you can even share, what are some exciting areas either in Oklahoma or just around the different basins that you guys like to look at, or that catches your eye when you see headlines or see results?
Yeah, I think we're in the process of trying to figure out, like you mentioned, what is the new world, or what is it going to look like in 5 years, 10 years? Where are prices going, and that's ever evolving. But we keep a good eye on most of the MidCon. We're pretty well versed in the deals that are out there around us, and we're in multiple data rooms. We like to keep beat on activity and around us, but and that's some of our background being the Mid-Con, obviously, but we have experience on our team and the Rockies and Bakken and the Permian, and if the economics are there and the deal's right, we'll look at it. So we're maybe a little less targeted in that sense.
Anything? Go ahead, Ty.
I was gonna say, I'd say what we just talked about, I think, is a little bit of a balance of capital and returns. It is creating opportunities, and so the lack of capital means that there are, for those who can get it, means that there are some good opportunities. And I think that's exciting for our industry, and just you don't like to see the world hurting or gasoline prices run up, but there's a new appreciation or a little bit. I just had a conversation with my mother-in-law over lunch today about gasoline prices and price gouging and how and so I think it's opened our country's eyes, our people's eyes to what we do for a living. There's still a political spin to it, but it's I think the realization that this isn't going to be a transition that happens overnight, and you can't legislate that. Otherwise, a lot of people are going to be hurting. So I think that's been it's refreshing, I would say, more than exciting. I think there's an appreciation for what we do a little bit more than there was.
I've seen that shift for sure. 2020, it was like this oil and gas is dead. Tech valuations are through the roof. It was like you had to have some kind of tech angle to get any value anywhere, and real stuff was dead. And now real stuff is very much needed. The world is realizing we can't get away from hard assets, and it's like you can convince yourself that maybe semiconductors or something are like the core resource of the world, and to some extent they are from the technology standpoint, but you still got to have real things. You need energy, you need commodities, and so it's not going away. What about anything that's printed lately on the M&A side that was surprising, either to the high, like someone paid a lot for something or someone paid little, or just any on the deal front that you've seen? You said you're in a lot of these data rooms. Are there things that you thought would transact that didn't, or that did transact that you didn't think? And if you don't want to call out someone specific, you don't have to, but I'm always curious to hear like what people are seeing on the M&A side. And I don't look into the metrics as much. Like I just see something print and I'm like, oh, interesting, that person sold. Like for midstream, I might a little more, but for the upstream side, I'm not paying attention to like what these valuations are looking like, and just kind of, what's coming across in terms of things that have gotten done, call it in the last year.
Yeah, I'd say we've been talking about how many viable locations are left,
right.
And so some of the deals of late, won't name any names, but they seem like it's hey, we need some locations. And so that's, I think that's telling. It's interesting, exciting for us. It's a location rich, quality location rich company. And so I think that's, there was a while where, there's a shift, I think, in M&A that people wanted, they needed to hit their deals needed to hit cash flow metrics, and they still do to a degree, but that was the focus. It was like, hey, there needs to be enough PDP in this deal that I can make sense. And now I think there's a little bit of there's a lot more interest in
exploration.
Yeah, I need to generate a certain return, and it's hard to do that by acquiring a PDP asset. And so I need something that has meaningful location and running room development on it. And so some of the deals we've seen lately look more like that. Like we need to add to our inventory because we're a little concerned about where we sit.
Yeah, and returns should bring capital back to the space.
Right. Yeah, it's like what Chuck Yates always says. He's like, we had a red problem and a green problem, and the green problem was obviously the ESG stuff and the transition narrative, and then the red problem was the people weren't making money. So it's really easy to say it's the green thing, why people don't want to invest, but ultimately the red problem was there and it was glaring, but to the benefit of the consumers. I mean, people had cheap product for years. But we'll wrap it up here, guys, because I've taken an hour of your time. But is this like the first podcast you guys have done? You've been on one of these before?
First one for me.
First one. Yeah.
Cool, man. Well, that's exciting to get you guys on. It's different. You know, part of this was just to like force myself to have conversations, talk to people. It's been a while since I've sat down with both of you guys. Probably should have done it sooner. Hopefully this is something that if someone's like, hey, what is Trailhead about or whatever, I think you guys gave a fantastic overview. And hopefully you guys get some value out of it, and maybe it's a piece of marketing or something that you guys can use. But I really do appreciate you guys taking the time to do it.
Yeah, thanks for having us. It was enjoyable to do. Now, scratch that off the bucket list.
Yeah. All right, guys.
Max, I think you've done a great job. I remember when you first announced yourself on Twitter and said you were going to do this. You've done a great job of plowing ahead, and you've got a great following, and it's always a good time.
Well, I appreciate it. It's a grind, but I think that the benefits of using tech to get out there and talk to people and communicate and spread the word and, like post on Twitter for better, for worse I think is good long term, but it's definitely something that I had to get outside of my comfort zone. But we'll get together soon, guys. I talked to Michael recently, and we need to figure out a way to get down there and hang out. But we'll talk soon. Thanks again for coming on.
Come see us. Thanks, Max.
Absolutely.